Welcome. My name is Alexis Sidney, and I'm founder and CEO of the 12 Firm. We're an accounting, tax, and consulting firm that specializes in safeguarding entrepreneur finances to prevent IRS headaches and give you peace of mind. If you're watching this video today, chances are you're working with a tax preparer or CPA and paying thousands of dollars in taxes every year. You're probably also wondering if there's anything you can do to review your taxes. What we're going to do today is take a deep dive into explaining what is tax planning, the power of tax planning, and how it can help you save tens or hundreds of $1,000s in taxes, even if you already have a CPA. So let's go ahead and dive in. One of the biggest problems in this country is that most small business owners and individuals believe that their CPA, accountant, tax preparer is saving them money on taxes, but they aren't. They're just preparing the tax returns. Tax preparation equals cost. Tax planning equals investment with return on investment. Have you ever had tax planning done in the past? How many years have you been working with your current tax preparer? How many years have you been at the income level you're at now? The truth is, nobody wants to do tax planning. So what is tax planning? Tax planning is after year end. Tax preparation is the process of preparing tax returns for the submission to the IRS. Before year end, tax planning is the process of looking at a person's life, business, and regulatory requirements to legally reduce taxes. So when we're tax planning for a client, what we cover is reviewing the client's deductions, legal entity structure, retirement, insurance, loopholes, any tax cuts or any updates to the tax laws, and any niche specific strategy. 23 million businesses in the US aren't properly structured. And when your business is not properly structured, it can cost you with paying taxes if you don't have the legal entity set up the proper way. So how I got started, I've been an accounting and tax professional for over 17 years. And for years after years, I started seeing the increase of individuals going into entrepreneurship. And they were not organized for one. They weren't maximizing their tax deductions. They weren't tracking their business income and expenses properly. And when it became tax time, it was just crazy. They didn't have anything in place. They were losing money. It just was a bad situation. And so I wanted to make a difference. I wanted to help small business owners and clients that I serve. And so I started educating myself and just paying and investing in myself to be able to get the top education from professionals in this industry so that I can be able to empower my clients to be able to support them so that they can stop paying thousands of dollars in taxes when they don't have to, just with the proper tools and proper strategies in place. So that's how I got started with tax preparation and just really specifically focus on tax planning. And as I said, tax planning can save you thousands of dollars in the current tax year and every year going forward. One thing that you have to do is to plan properly. Tax planning is not a one and done type of service. It's something that you continuously want to look at, especially if your business is growing. You may need to review your tax plan quarterly, or definitely you should be taking a look at it annually. So what I want to do is just share some of my experiences that I've had. So I want to share with you a story about one of my clients. Her name is Kelly. Kelly is 42 years old, and we were able to save her $18,532 on taxes in her first year and every year going forward. She started investing approximately $1,500 a month, and she was able to turn things around for her business with proper tax planning in place. So she did not have to increase her income. She didn't have to reduce her expenses. She didn't have to grow her business. She did not have to change her lifestyle. All she had to do was focus on tax planning. So typically, when we go through a tax planning session, we work with our clients, we get their information, and as you can see here on this slide that Kelly was 42. We learned about when she wanted to retire, how much she had saved for retirement, what she was willing to contribute monthly. And as a result, we were able to save her money. And as a result, we were able to help her save as it related to retirement savings and some other strategies. What most business think is that they're not big enough for tax planning. They think that they can't afford it or it doesn't relate to them because of where they are. And that's the wrong mindset to have. You want to start planning ahead just so you can have the right strategies in place and you can have a plan in place and not get caught by the wayside when it's too late. Another one of my clients, her name is Jennifer. She had a job and we did our first tax plan for her. She had $0 in sales for her business, but she was on a mission to quit her job and do $700,000 in sales her first year. So we helped her properly structure the business to minimize taxes. We took into consideration various forms and asset protection methods for her, and we reviewed the options for legal entity incorporation. We made a plan for savings, investing, and for growing the wealth of her and her business. And before the job was even quit, we completed the plan for her. A year later, the revenue goal wasn't actually hit. It wasn't quite 700,000 in sales, but it was 653,000 in sales, which is pretty good. But the lesson is that the best time to do tax planning is before you have the income. Had we not did the tax plan, it would have resulted in an overpayment of taxes of $42,023 in the first year and even more in future years. So it's very important that you plan ahead and you do tax planning so that you can just have a sound mind and just know which direction you're going. So your accountant may be well-meaning. Again, a lot of tax professionals, CPAs, or just anyone who's doing taxes, they're doing taxes with the mindset of compliance. But it takes a tax strategist to really dig deep and to look at your tax return and your entire situation with planning in mind. It is a skill that you have to learn. So what we do when we first work with clients is we take a look at a few of the basic strategies that are most common if it relates to you and your situation. We'll look at some of the basic strategies such as retirement, hiring your kids, the Augusta strategy, the captive strategy, and the admin office. And as you can see, over a 5-year period, we're just looking at some of these strategies. This client was able to save $173,000 for the 5-year savings. I know I haven't looked at your returns and I have not done your tax returns. Most of you are watching this and you're joining virtual. But if you're interested in scheduling a consultation, we'll be happy to review your returns with you and give you a preliminary tax assessment of what you possibly can save and what strategies you can put into place if you would like to be considered or have a tax plan done for yourself and your business. So like I mentioned, I have not reviewed your returns. I would estimate that you have overpaid if you have not had a tax plan into place. So we're going to look at this client. I'm using some numbers for them. In 2020, they overpaid $16,251. They did not have a tax plan in place. So with that, they still don't have a tax plan in place. And then for 2021, they're estimated to overpay $18,382. And so when you look at that for the 2022 year, they're still on a track each year going forward to overpay in taxes because they do not have a tax plan in place. And so this is where tax planning comes into effect because you want to strategize. You want to see what strategies you can implement. What can you do so that you do not have to overpay this amount to the IRS in taxes? And just to look at it, you paid overpayment to the IRS because you overpaid in your taxes. But on top of that, you had to pay a fee to your accountant. So what you pay is the accountant and they split that money with the IRS. So that's a loss for you. And I'm not saying that your accountant was negligent or incompetent or anything to that nature. Like I said earlier, tax planning is a skill and everyone is not doing tax planning. They're just preparing your tax returns for compliance because you have to file your tax returns. If you don't, the IRS will eventually come after you. So tax planning is different. Tax preparation is for compliance. So the process of tax planning, when we work with clients, what we typically do is set up a strategy session. And during that strategy session, we meet, we get to learn you, we ask a whole lot of questions. Most clients, answer them, they tell us their stories, and we just learn each other. And we take the information that we get from you, and within a 48-hour period, we send you a request list. That list just pretty much has everything that we need to review your tax returns, any documents, or just anything necessary to help us with this process of creating a tax plan assessment for you. After we get the information, it typically takes us 5 to 7 days to do a kickoff call. Once we do the kickoff call, there's another 3 to 5 week period for us to deliver the tax plan. And once we deliver the tax plan, we'll meet with you, we'll review it, and then we'll follow up as needed to move forward with the process. So a lot of clients want to know, what goes on in this tax planning? What are we doing? What are some of the things that I'm eligible for? What are the strategies that are out there? So what we do is we start with a deductions review. We look at your home office, travel expenses, meals, hiring your children and grandparents, maximizing depreciation, any healthcare strategies, fringe benefits, accountable plans, medical reimbursement plans, home administrative office, and more. There's so much different things that we're looking at when we're doing a deductions review. So after we do the deductions review, we take a look at your legal entity review. A lot of times business owners, when they first get set up with their business, they're either a sole proprietor, they're a partnership, some advance into forming a C Corp or S Corp. There are multiple entity considerations, the QBI deduction review. There's just so many legal entity things that we can review that help you with your tax plan. And so what we do is we review your structure to see if it's advantageous for you to stay in that structure. And we present you with details, with numbers in the tax plan so you can see what strategy is best for your business. And if we need to modify your structure because it's more advantageous for you to be an S Corp versus a sole proprietor, or a C Corp versus a sole proprietor, or any other structure, that's where you'll get that information from. The next thing we do is a retirement review and tax planning. So we'll look at your retirement, where you stand with that, and which direction you would like to go into. And then we'll set you up so that you can start doing profit sharings or creating a retirement plan, whatever that looks like for you and your business. And we'll help you get that set up so that can be implemented as a part of your tax plan. The next items that we look at are asset protection considerations. There's so many things that fall into this. We use life insurance to create these Roth IRAs, just different provisions that can be put into place for us to look at asset protection and what that looks like for you and your tax plan. The other thing that we look at are just core strategy implementations. There's so many things we look at. Again, the deductions, your legal entity, your retirement, insurance. We look at the accountability plans, loopholes, any tax changes or tax acts that have been implemented. We look at core niche strategies because for some businesses within a certain niche, there are strategies that apply to that particular niche only. And then we look at advanced strategies as well. So again, this is a very detailed planning session that we go through where we take a thorough look so that we can determine what works best for you as it relates to your tax plan strategy. As a part of getting a tax plan with our company, we like to prepare the business and individual taxes as a result of us doing the tax plan. However, you can simply take the tax plan to your accountant, but you want to ensure that they are properly put into your tax plan when they're preparing your taxes. And 9 times out of 10, if your tax preparer is not doing tax planning, and you was to implement a tax plan, you may want to consider having the tax strategist prepare your taxes for your business and your individual to ensure everything is working effectively. Another thing that we do when we do tax planning is we do quarterly estimated payments. Most times, a lot of businesses do not submit quarterly estimated payments. I've seen it a lot in my years of doing tax preparation for businesses. And what they do is they typically just wait till they file their taxes and be surprised at the end of the year on how much they owe. Or they typically come up with a lot of deductions and write-offs, and it's like their business is at a loss. And then they don't look profitable when they file their taxes because the proper estimated taxes were not paid or considered. So one way to ensure that you're doing things properly, quarterly estimated tax payments, is that we include that as a part of your tax plan assessment and strategy so that we can ensure that you are paying the proper taxes and that everything works well with your plan. So everyone always asks about the strategies. What do they look like? So here are a few diagrams if you're a diagram person and you just like to see, how the strategies look or some of the common ones. We simply take these strategies and we see how they fit into your situation. Every strategy may not work for everyone, but we can find strategies that will work for you. Here are some listed. There's an S Corp, a LLC strategy, a C Corp planning strategy, asset protection with LLCs. There's so many more, the family office structure. So these strategies are implemented and they work for you. And our goal is to find what works for you and what saves you and support it with tax law. So it's not like we're just taking a position and saying, yes, this works for the client, but the law doesn't apply to your situation. So I just wanted to share some of the structures that we typically work with, just a few, but there are so many more that's out there. So with most of my clients, the goal for tax planning is to save them 3 to 5 times more in taxes in the current year. Our goal is to help them protect their assets for them and for their families. Our goal is to help them set aside taxes quarterly so they never get surprise tax bills at the end of the year. Our goal is also to help them properly document the tax position so they're not worried. Like, again, I just mentioned, I don't want a client to just say, oh, I can take this strategy, I can hire my kids. Well, No, your kids are 30 years old. You you can hire them, but it's not a strategy that works well versus if you had younger kids. So our goal is to educate clients and make sure that they're taking positions with these strategies and that they're not worried about, if we took this position that we can't back it up. So that's our goal. And we also help our clients to save and start investing for retirement. So that's what the purpose of the tax planning strategies and you implement on a tax plan, what this does for you. Okay, so the reason most accountants don't know this is that there's a difference between being a tax preparer and a tax planner. Tax preparers are compliance oriented. Their goal is to prepare your taxes and get it submitted by the deadline, whether you file on a normal deadline or an extension. A tax planner is value focused. So they focus on the value of putting strategies in place to help you save in a legal manner on your taxes. A tax preparer is like a generalist doctor. Versus a tax planner, you can look at them as like a spinal surgeon. They're specialized in a certain area with a certain expertise. A tax preparer is reactive. More so than often, the clients give them their documents and there's nothing they can do but react to the situation. However, with a tax planner, you can look at them as being someone who's proactive. They plan in advance, they get the documents, or they look at your position from prior years and they put a plan in place and strategies in place so that you can be proactive, so that you don't have any surprises and you're not reacting to a situation. So that's the difference between a tax preparer and a tax planner. So again, I keep emphasizing that we cover dozens of strategies when we're going through tax planning. We're looking at deductions, we're looking at your legal entity structure, retirement, insurance, legal loopholes. We're looking at any tax laws or changes that have been put into place. If there's any aid that's out there that we need to consider. We're looking at exit strategies and capital gains and tax advantages for wealth management. We're looking at your assets and just international things if that applies to you, niche specific strategies and any advanced strategies. So again, there's so many things that we cover when we're doing a tax planning session. One thing that we cannot do is we cannot make guarantees for you. If you end up starting another business, if your salary or your net profit drops substantially, we cannot guarantee that you will be able to implement all the strategies that we recommend. There are stuff that changes and that come about from your tax situation. So the more things that we are aware of with your tax situation, the more that we're able to help you while we're planning and throughout the year, should you decide to implement a tax plan filled with strategies that help you legally save and minimize your taxes. One thing, again, that we talked about earlier is quarterly estimated payments. That is also something that we do as a part of our tax plan. So that is all that I have. I hope that you have enjoyed our time together. I hope that you walk away and you understand that there is a difference between tax preparation versus tax planning. And if it so benefits you, I hope that you will definitely connect with a tax planning strategist. Again, a person that does taxes for tax preparation is different from somebody who does tax planning. So your CPA or your accountant may offer that service, and that's great. I encourage you, if they do, to connect with them to get a tax plan assessment in place and hopefully implement a tax plan for you and your business that will help you to be able to save on taxes legally and minimize your tax liabilities. However, I would love to connect with you. I would love to hear from you. So you definitely can reach out to our firm. Our information is here. or you can simply go to the12firm.com/tax planning, and we'll look forward to hearing from you and look forward to learning more about your business. Again, my name is Alexis Sidney. I am founder and CEO of the 12 Firm, where we safeguard entrepreneur finances to prevent IRS headaches and give you peace of mind. Thank you for joining today, and you be safe.